VK Sharma of HDFC Securities now join us. Gentlemen, good morning to both of you, and let me start with you, Vinod. First, the Nifty and the Bank Nifty. Is the rally to be used to sell, or is it giving you the confidence that 8,050 is the bottom?
1 minute on macro. The data to be followed worldwide is the Korean exports, and they have been falling each month since November 2014. So therefore, the world is going in for a recessionary kind of scenario, and obviously we saw the GDP being targeted to 3.1 globally. Now, in India, we have seen a correction of almost in the bull run, Latha, if you remember, from 2003 to 2008, we have seen two corrections of around 61 odd % in a bull market. 61% corrections, and still it was a bull market. So this correction is what? We have not even seen a 1/3 correction, which is a normal correction, and the 1/3 correction would take the market to probably a level of 7787. That is the kind of level. So current support of the market is around 7960. It will take a while for that to break. But I think 7787, that kind of level should hold, and it will take a lot of other things other than the weakness in the monsoon to bring it to make the market slower. So currently, we believe that for the short-term support for the market is still higher at 7997, and 8300 or 8337, whether 200-day moving average lists, I think it is very difficult to crack that.
So at the moment, what risks are evenly managed, or you would prefer going? The risk is the reward is more than the risk. Is it a buy?
It is a buy at dips. Okay. It's a buy at dips. It's not going to. It will eventually go, but not immediately. Okay.
And what about Bank Nifty?
Bank Nifty, I think the kind of support is which exists in the Nifty is not there in the Nifty. So Bank Nifty I'll avoid per se, because the weakness of the banks could further improve, the weakness could further deteriorate with the monsoons.
Okay. Vinod, you have a couple of strategies. Talking about the FMCG space, you like Britannia over there?
Yes.
Because people who hold Nestle will now come to Britannia.
No, we're looking at the market in two ways. One is, although the markets are down 11% from those highs, there are 16% of the NSE 500 stocks are above the highs of what we saw in the Nifty at 9120 on 4th of March. Okay. So you look at two ways. What are the stocks that you can buy in strength which are down, but where there is good visibility, and the other stocks which are doing well, which the market likes, you don't have to tell them what to buy, and those you can buy at dips. So Britannia is one of that story. Okay. So although, I mean, this has given you tremendous, in a time when the biscuit market was not growing, they have increased market share, they've eaten other people's lunches. So, and mind you, if you're buying Britannia, you will never know when that story, the problems which are, the fire which is at Maggie could spill over to any other food items as well. But with that caveat, I think I'm suggesting buying the 2600 call at around 50 rupees. It was 70 yesterday, so if it dips, I'll buy at 50. Stop loss at 30, and probably a target of 100 rupees. Stock is otherwise also doing fantastically well.
Okay. Actually, if I can't eat Britannia bread and Maggi noodles, I wonder what I'll have for breakfast. But let's get to the other stock you have on your list, BPCL. Now, I think it's an extremely under-noticed stock. We must pull up BPCL. It's actually a one-way street for the whole year. I mean, it's an extremely well-performing stock. Yeah. You still want to buy it?
Yes, still want to buy it, because this is one other stock which has done well, higher than what it was on 4th of March. Yes. More importantly, the environment is improving. Yesterday we have seen a crude cut of around 2.8%. Also the fact that you have OPEC meeting where we have stuck a neck out, no increase in production, no decrease in production at all. And then you have the 30th June meeting, 30th not meeting, but the timeline by which Iran deal should be in place, which will send in another 1 million barrels of oil, tumbling down the demand. Demand itself is pretty high, and OPEC even in fact produces more than 1 million above its own target.
And whenever crude prices fall, our prices don't fall as much.
Yes.
But every time crude prices rise, BPCL is able to raise petrol prices.
Yes. So what I'm doing is I'm buying a 880 call and selling the 920 call. Okay. So I'm not taking additional risk. I'm limiting my risk to around 12 rupees, because I buy the 880 call at 23 and sell the 920 call at 11. Maximum loss is 12 and maximum possible profit is around 28.
Okay. Well, let's quickly get one more stock in from you. I'll reserve Coal India for later, but take us through Infosys.
Infosys is that stock which has done pretty well, and while we are not here, we have spoken in the last session also that we like the fact that the CEO has the guts to say that we'll grow from 8 billion to 20 billion by 2020. Even if that doesn't come around, it's a good stock to look at, and we are suggesting buying the 2050 call in Infosys at around 34. That's the price at which it was. Stop loss at probably 30 rupees and target of around 65.
Okay, just dial. There's a buyback announced as well.
But I had given this call. I just changed the price prior to this call.
So, I know. We received it before we got the exchange.
Looking at the data as well as I sense that this is one stock which is holding up in this otherwise weak market. So I've revised my call. I'm suggesting now to buy the 1150 call at whatever price it is. It was 48. Maybe it opens higher. You buy that. Keep a stop loss at 35. And if you buy it higher, increase that stop loss. Our target is around 80 rupees. So although this is one way of buying back from the market, is one way of the promoter increasing the stake through the back door if they're not participating in the buyback. So his promoter stake, which is currently around maybe 32.78, can go up possibly to around 43.7%.
Okay. Coal India is the stock actually I wanted to discuss with both of you. But first, technically, Vinod, how does it look?
Technically, it's a stable stock and done well. In terms of open interest also, we did see position being built to the extent of 2% yesterday. It went up slightly by 0.35% in terms of price rise. My suggestion is to buy the 390 call, which was available at around 9 rupees yesterday, to be bought only if it dips to around 7, and stop loss at 4 and target is around 15. The reason we like this stock, because we do see that the in the coming year we'll still see 11% rise in production, and therefore which could rise further also. But this is the minimum that we'll have.
Okay. So, Vinod, you have some more strategies before we let you go on names like McLeod Russell. Just take us through that.
McLeod Russell is normally not a stock which most investors should get in. It is essentially meant for those stocks, people who are holding this stock. So they can buy the 230 put at around 10, stop loss at 7 if you want to trade it. If you just hold on to and protect, then just buy this put at around 10 and target possibly is around 16. But there is other strategy on Hindustan Lever,
sure.
Where if the fire spreads, it could be one of those stocks where it does. Especially meant for investors who are holding Hindustan Lever. One way of protecting is that you buy the 820 put at around 23 and hold on until the settlement. Or if you want to just trade, then put a stop loss at 16 and a possible target of 40.
All right, Vinod, thank you very much for giving us that bunch of strategies. Vinod's strategies will continue to flash at the top of this